episode of Fintech Firebrand. I'm founder of Firebrand Research, Virginie O'Shea, and I'm here to chat to you about all of the fintech and finreg happenings that have been going on at the end of October and into November. Certainly we're into conference season right now. Last month we saw Sibos going on virtually again this year. Some of the hot topics during that week centred around, there was a lot of discussion about sustainability. We had Mark Carney as the final keynote talking about the future of sustainability and its impact on the financial services sector as at large. Certainly very interesting, particularly around climate risk and how we adapt to those dynamics and factor them into pricing and how our approaches as an industry overall, including operational resilience and systemic risk from that sector too. And operational resilience was another sort of key theme throughout the week. There were numerous discussions about cybersecurity and its importance within the current environment and beyond. Obviously, we've had some interesting developments over recent months. Robinhood was recently hacked this month in terms of data theft. I think around 5 million accounts were hacked, and that is another sort of significant data breach that they have to address. Loopholes there. Certainly discussions during Sibos centred around a lot of those topics and how we can better combat financial crime, fraud, and also the new sort of avenues that cyber criminals are using to get into organisations, and including the work from anywhere mandate and how we address particular things that are related to that segment. Interestingly, I chaired a panel where we had a lot of discussion about how cybersecurity is actually a business, or cybercrime is a business, and cyber criminals will treat it as such. There was some discussion about ransomware as a service, which is another interesting area because obviously we've had SaaS, now we've got RAS as it is being known. So certainly there are some important things to think about there too. I felt overall there was a lot of progress moving on from some of the pure technological discussions we've had at previous Siboses about, blockchain will save all of us and it will solve all the problems, to much more practical look at things and how to address them in light of changing regulatory and market circumstances, particularly around volatility. And again, T+1, as it has been all year, was another big topic, and the potential move to T+0 in future. So all of the hurdles and the targets to try and move that way in that direction, obviously North America being first, the US, technically speaking, being first, and potentially the rest of the world following. So that was a key topic during the week as well. And one last area, I guess, that sort of came into the frame was the evolution of SWIFT itself. And there's been a lot of updates, particularly on the security side. There's a renewed focus on the security sector. There's the addition of a new initiative around implementing the unique transaction identifier to help track settlement and clearing and settlement processes and the post-trade transaction lifecycle. Now, I think we have a great handle on sort of order tracking and in the front office, but maybe we haven't been as robust as we could be in terms of tracking things across the long chain of intermediaries in the post-trade realm. So certainly some interesting developments there. I encourage you to go to the Sibos website and catch up on any sessions that you may have missed. And on the regulatory front, we actually had an interesting development from the Monetary Authority of Singapore, most recently, I think it was last week, looking at improving its fintech sandbox, which it was one of the front runners as regulators go in terms of setting up a fintech sandbox in 2016. And it's been evolving that sandbox ever since in cooperation with its local market participants. Now, the latest version of the sandbox will be launching in January 2022, so in the next couple of months. So we'll be seeing some changes going ahead there. So one of the things that it's going to do is expand the criteria for eligibility for participation in the sandbox from startups to slightly more mature startup firms. So not just first movers, but those that have been around for a little while and are early adopters of technology. So that should be very interesting. And there's also going to be a streamlined application process to make it easier for firms to get involved. MAS is also promising to grant 500 Singaporean dollars for funding for some of these startups as well, and participation in something it's called Deal Fridays to help these firms broker some deals and get into the market themselves. So certainly very progressive on the front of the regulator. It's interesting to see the spectrum of regulatory engagement with fintechs. You have everything from a rather sort of stand back approach in the US, where there are some legal parameters about how engaged the regulator can be with fintechs, and I can't even call what they do sandboxes, through to mass actually actively funding these fintechs. So it'll be interesting to see how other regulators that are active in this space, the UK's FCA being one of them, adapt to what's going on in Singapore. Now, another key area that's been in the frame on the regulatory side has been social media engagement and investment advice via the medium of social media. And FCA, the SEC, ESMA, in fact, have all been talking about this. There's heightened awareness of the impact of social media, Twitter being one such example. We've had some high-profile infractions. We've had a lawsuit put against Elon Musk, for example, most recently by JP Morgan, interestingly, about some of the manipulation that could have gone on as a result of share price movements and tweets that he may have sent. So there's a lot of real interest across the industry on this topic. And social media being a technology that we're all sort of relatively used to by now, particularly when we're all working from home, and it's a source of getting information out there quickly. We've got a lot of sentiment analysis tools in the front office as well that are using and consuming this data that are impacting trading directly, not only just retail trading, but also institutional trading. So there's a lot of concern from the regulators about market abuse and how to address that. So there's been many speeches given over recent months, as I say. The FCA has come out and said it will be keeping a very close eye on social media platforms, particularly for the protection of retail investors, as has ESMA. So we can expect that there's going to be a review of all of the different outlets, including things like TikTok, which we may not expect to be in the frame, but certainly there are a lot of potential avenues to explore from the regulatory perspective. Exactly how they police social media will be interesting to see. There are obvious areas like the Twitter incidents that we may have seen in the past, but there are many different, as I say, avenues to explore, and that will require quite a lot of investment and focus from the regulators themselves. So maybe we'll see them deploying some new technologies on that front too. Another quick, interesting development was the partnership announced between Google, extended partnership between Google and CME in the US, being one of the largest derivatives exchanges out there. Google itself has made a $1 billion investment into the future of moving to a cloud environment with CME in partnership there. So it's certainly an interesting development to see how that's going to shake out in future. We do see a lot of strategic moves in the cloud realm, and the cloud providers seem to be hotting up the race in terms of who's going to grab market share from different types of financial institution. Now, Firebrand's been mapping out some of these things, so expect in my roundup and look into next year, cloud's going to be a big part of that, and some of the challenges we faced related to what I was mentioning earlier, cybersecurity, operational resilience and oversight. Big tech is an area that is coming again increasingly under focus from regulators and the industry as a whole in terms of understanding dependencies, and particularly as we've had some outages over this year, how we can switch from one provider to the next is going to be key going forward. And every month I always think I talk about things like ESG, and ESG has made more progress again. We've had the FCA releasing its, as I would call it, SFDR Lite version of its recommendations for sustainable finance disclosures. We've also had some moves in the US with the SEC rescinding some of the Trump era protections or blocks for shareholder voting around certain topics related to climate and also to social policies. So we could see an uptick in proxy voting on some of these issues, and overall corporate engagement with their shareholders is likely to increase over the next few years. So expect that realm, the asset servicing realm, to be impacted by that. And also, the wider shareholder engagement initiatives across the globe. On the US side, we've also got ESMA. It's a key part of ESMA's capital markets union. So I expect that to be real big topics going forward into the next year. And then my quick final thoughts for this month's Fintech Firebrand relate to what's going on within, I guess, the gamification space. There's been a lot of discussion, as I previously mentioned, about social media, but there's also been interest in how we've gamified some of the apps with regards to retail trading and how that influences trading behaviour on the part of these retail investors and whether that's to their detriment or not. Now, again, it's a relatively tricky topic, but I'm assuming we're going to see much more in the way of disclosure requirements and justification on the part of some of these retail brokers about how they've designed their apps and the technologies that are underlying those platforms. But another interesting thing to think about is how we as an industry engage with technology, and could we make our engagements with technology much more seamless, much easier, and much more pleasurable, let's put it. I mean, let's face it, a lot of our personal lives, we spend a lot of time on technology, whether it's scrolling through Twitter or we're playing games on our phones, or for that matter on consoles and things like that, particularly if you've been stuck at home for any length of time. Look at the popularity of Animal Crossing within the adults across the globe, for example. That's an interesting dynamic there. But you take that and you look at our working world and how difficult it is, and how some of our user interfaces, particularly in the middle and back office, are not that well designed, they're not that interesting, and that is a massive disconnect. So I think the evolution of technology going forward is to take away some of the grunt work, some of the challenges that we may have in terms of learning technologies and tools and making user interfaces. Certainly a lot of vendors are trying to simplify them, but maybe we should look at how to extend that into having a pleasurable user experience, maybe building out and testing and trialing different functionality to help improve people's day-to-day lives. So I would say gamification in certain areas may be a negative, but if we look at it from an overall perspective in terms of technology development, maybe we can learn a few lessons about those bells and whistles that we can add to our working lives.